Hey guys, Akil here. Welcome back to another Trading Edge video. Thank you as always for joining. We didn't have a lot on the radar today, so instead I want to give you a nice little trading lesson that really follows up on a conversation we had this week. It was a conversation that actually led to a Trading Coach podcast episode called Rules for Discretionary Trading. I think this is a perfect follow-up on that because this is one where rules will keep us out or keep me out of a potential trading opportunity that I think looks really good. Now, the reason I think this trading opportunity looks good is because of this, right? Price has been on this amazing uptrend, right? Remember our very basics. If the price chart is moving from the bottom left to the right hand, top right corner, early in the morning here, of your screen, it is in a bullish trend. Our last retracement came right here, and we do have got obviously more specific rules for trends, but that's something that we always, when we do workshops or whatever, the very basics, right? If you can just kind of put your little kid brain on, just if price is going from bottom left to top right, bullish. If it's going from top left to bottom right, bearish, right? So some of us tend to overcomplicate things in the beginning where common sense often rules. But we've had our most recent new structure high right here, and we've kind of settled off a little bit. And now we've put in a nice retracement back to our previous outside return. And this is what we call a kill zone. And a kill zone is basically a potential reversal zone. So a zone in which we would expect an outside return to come to, or retracement to come to, before giving us the next move upward. And to add on to that, if you understand how to read candlesticks, and that's something that I recommend every trader does. I think too many newer traders, we kind of rush through too quickly, right? We don't want to understand candles. We want to go straight to patterns or combinations or stuff like that because we feel like that's what's going to make us money. But at the end of the day, I believe that a true chartist has a true understanding of price movement, and price movement at its truest form is tick by tick, and that's what makes up a candlestick, right? My philosophy has always been like this. If we're going to read the market, right, we want to look at the entire story that the market has to give us, right? Well, we can't understand a story if we don't read a chapter. We can't understand a chapter if we can't read a paragraph. We can't understand a paragraph if we can't read a sentence. We can't understand a sentence if we can't read or understand individual words, right? So individual candlesticks are like individual words or individual sentences. We have to understand what they're telling us because those are going to give us clues of what the bigger thing, the sentence, the paragraph, the chapter, the book is going to tell us. And the story that I read from this right here is that price is obviously on a bearish move. We have a strong bearish candle right here. We have more strong bearish candles right here. You can see it closing clearly in the bottom third of the candle. This one even has a spike up and then boom, a close in the bottom third or bottom least half of this candle. We then get a few candlesticks that give us a completely different story here, right? If I can find my arrow thing, they've been moving this thing around everywhere for the last week here on TradingView. I'm trying to figure out where it's at. Here we go. Apologies for the dog in the background, right? But we have this candle right here, which tells us a different story. Even though it is red, even though it is technically bearish, I look at this as being a bullish candle. Why? Because the candlestick tells me that during this session, the bears, sellers, pushed it down, but then the bulls were able to fight it up, allowing it to close in the upper third, making this a weak bearish candlestick. We then have another similar one right here with this kind of doji candle. This is more of an indecision, but really still, going to the bear or the bullish side, because we pushed down, longer wick to the upside versus or longer wick to the downside versus the upside, and we close kind of right in the upper third. This is also an inside bar, meaning completely within the range of the previous candle. We then get a third one, which is another inside bar, right? Inside bar of not just the previous candle, but the one before that. And then we end the week with another inside bar, right? So 1, 2, 3 inside bars in a row, all of which, aside from maybe this one right here in the middle, have a bullish kind of connotation to them. So we look at this and we're looking like a wedge pattern, right? A consolidation pattern. And what we know is that contraction leads to expansion. So we should break out. And if we're getting all these bullish signals, right, this rejection of the bears, that breakout should be to the upside. Why? This is also at, again, our kill zone for a trend continuation trade. So when I look at this and I see this, right, my not me right now, but my old intuition as a newer trader would say, okay, gotta buy, gotta buy, gotta buy, gotta buy. Now, the problem is, this is what we call the what, meaning the individual candlestick, the individual pattern formation, the individual candlestick combination, right? The what has to be lined up with the where. And although it's lined up with the where in this specific time frame, what I didn't do in this example is I didn't do a top-down analysis. I didn't get an overall perspective of where the market is at. That's that IPDE process we always talk about: identify, predict, decide, execute. And if I go to the daily, or easier if I just do this, if I draw a line out at these highs and I go to the daily, and you're going to see, and I would start on the daily first. I'm doing this backwards for, example purposes to show you how something can look really, really, really good, and then all of a sudden it's invalid. But in real life, I would start with my daily first and work down. If I go to my daily and I go back to 2016, you're going to see that we are right at this previous level of structure high, and we did not break it. So we did not violate this previous level of structure. So when I look at this and I identify a hold of structure. Because I identify a hold of structure, and this is where the rules come in around that discretion, right? Although those candlesticks look good, they feel good, they point me in a certain direction, everything has to fit within my rules as far as tradable opportunities. And because we did not violate this level of structure, I cannot predict a continuation higher. And because I can't predict a continuation higher, I don't want to be in a trading opportunity where in order to make profit, I would need the market to go higher, which is something that I don't expect it to do, right? It looks kind of silly or feels kind of silly if you think about it like that, right? Why would you take a trade that in order for that trade to make money has to do something that you don't actually think it's going to do? And again, by think, I don't mean discretion, my actually feelings. I mean, think as far as my rules-based analysis. So this is where we can kind of take that discretion of seeing things that look good, that feel good, and package them around rules and saying, hey, I know it looks good, I know it feels good, but if it doesn't check the boxes, then it's not a tradable opportunity for me. Now, the other part of discretion is this. We can look at this level of structure. We can have different traders. I'm sure we do have different traders watching this video right now that will see this a little bit differently. Some will be like me and say, hey, previous level of structure, beware, have not broken it. Let's wait till we get above that first to make any type of prediction higher. We'll have other traders that say, hey, Keel, this isn't even a relevant level of structure to me. Why? Well, the swing high of this move starts right here, all the way to the swing low. So what I'm doing is I'm ignoring that move, and this is the main level of structure. That's for me. And if that's the case, right, we delete that. We go back to our opportunity here. Now we have a completely different story, right? Now we're no longer at structure, we're above the previous structure, and now this is a full-blown continuation opportunity to the upside. Now, if you're new, I don't do this to confuse you, but I want you to understand how different traders can look at a chart and even be on the same side of a market, meaning like, hey, we're both continuation traders, but see two completely different opportunities based on their skill, based on their analysis. And this is where that discretion comes into play, right? You have to take time, and discretion is experience, right? Intuition is experience. You have to take time to understand how to read the markets. You need to spend times in the chart practicing your skill. That way, the same type of moves stand out to you each time. You don't want to be in a situation where one time you're identifying this lower level as a previous level of structure, but the next time this higher level, but the next time you're ignoring that and doing the even higher level, right? Because then there's going to be no consistency in your trading. And you know the thing, right? Consistent analysis plus consistent execution equals consistent results. And that's what I see so many newer traders doing. They rush so quick to trade that they don't have time to kind of learn the skills. And because of that, there's lots of inconsistencies or lots of things overlooked in your trading. And from a discretionary standpoint, if you're going to be a discretionary trader where there's no just black or just white, there is this gray area where you have some adaptability, some flexibility, which is good for many. And there are so many comments under the podcast episode saying, hey, I love discretionary trading because it gives me a chance to kind of be an artist and interpret stuff, which I personally enjoy as well. But you have to earn the ability to do that. You can't just wake up in day one and start doing it. You have to understand how to identify structure. You need to train your eyes to kind of figure out what type of structure levels are you going to pick out? What type of structure levels are you going to ignore? And that all takes practice. For you guys on the Tier 1 trading platform, think about when we go through reading the ebbs and flows of price action, how many questions and how many Q&A sessions we have on like, hey, is this an outside return, or is this a level of structure? Is this minor? Is this major? Right? We have to go through the process of learning that correctly and correctly for us before we can, really make these types of decisions in the market. So again, a non-trading opportunity for me, but again, if you don't have this level of structure there, it could be a trading opportunity. But more so, what I want to do this week is give you guys a little bit of a lesson, because there's not really too much in the market, and I still want to provide value with these videos. I know so many of you guys watch them on a weekly basis. This is kind of the highlight of your weekend. That's how it was for me as well. When I was learning, my mentor would do these videos each and every weekend. I'd sit around my inbox, refreshing it, waiting for that email to come in. So I never want to leave you guys hanging. And by the way, don't leave me hanging. Support the video. Hit that like button if you haven't done so already. And I know a lot of you guys watching this aren't subscribed, but you love it. Do me a favor, just hit that subscribe button. It helps me grow the channel, helps me reach new traders. I'm acquiring a lot of questions from all the comments that you guys leave after each video, and I'm starting to record these little like shorts, these reels, these TikTok things, whatever they're called, kind of addressing those questions. I'm trying to put basically together a catalog where whatever question you have about trading, there's a kind of a 1 minute, 30-second video kind of addressing it, or at least giving you an idea. So keep them coming. The more traders we reach, the more traders we teach. And until next time, plan your trade, trade your plan. Take care.